Good morning, everyone. My name is Siobhan Kershaw, and I am the Senior Innovation and Education Advisor for LabCFTC, and we are thrilled to be part of DC FinTech Week, hosting the second session of the LabCFTC Empire Innovation Series, with today's topic, Regulation and Innovation Reimagined. Today, we have convened our Innovation Office counterparts from the SEC, the OCC, NYDFS to discuss how regulators view financial innovation and what are some of the best practices when engaging and presenting demos to regulators. So let's dive right in. Our first panelist arrives from the Securities and Exchange Commission as the head of the Strategic Hub for Innovation and Financial Technology, Valerie Szczepanik. Welcome, Valerie. Our next guest serves as the Chief, wonderful. Our next guest serves as the Chief Innovation Officer at the Office of the Comptroller of Currency, Beth Knickerbocker. Beth, good morning.
Good morning. Happy to be here.
Great. Good to see you. This guest serves as the Executive Deputy Superintendent for Research and Innovation at the New York Department of Financial Services, Matthew Homer. Welcome, Matt.
Hi, good morning, Siobhan.
Good morning. And rounding out the group is CFTC's own Chief Innovation Officer and Director of LabCFTC, Melissa Netram. Good morning, Melissa.
Morning, sir.
Before I start, I want to remind our audiences that you can join the conversation by submitting your questions within the Hoover app in the session Q&A. So let's get started. You know, it goes without saying that 2020 has been an unprecedented year, and we've seen a number of challenges, particularly in the American economy, in American families and health. But Val, starting us off here, what can you tell us about your initial observances of 2020 and what trends have been tracked by your office?
Sure, 2020, where do we begin, right? Before I start, I just want to give the standard disclaimer that the views I express here are my own and not necessarily those of anyone else at the Commission, including the commissioners. You're right, 2020 has been unprecedented and a very intense year. We've seen, obviously, the COVID-19 crisis impact the entire world. But perhaps like no other time, we've also seen how important technology can be, even if just in terms of provisioning a distributed workforce. With regard to the financial market, U.S. regulators and market participants have been able to keep markets operating while, I think, ensuring system integrity and protecting investors. The pandemic has certainly laid bare some of the challenges we're facing, but I think also has shined the light of opportunity on those challenges. As far as trends, I've seen a renewed focus on RegTech and SupTech. There's certainly interest in areas such as automated regulatory compliance for firms, especially when personal interactions have been replaced by remote ones because of social distancing and telework policies. I think there's an increasing need for regulators to capture and understand market movements and trends through data analytics. Certainly the SEC has been very busy. On the SEC's website, we detail the steps the agency has taken to maintain market continuity, monitor market functions and system risk, provide relief to issuers and registrants, and maintain investor protection efforts, especially with regard to critical market systems and vulnerable investors. But even with all the COVID-related work being done, I don't think there's been a deprioritization of the work of FinHub and Financial Innovation Hubs at my sibling agencies as well. Quite the opposite, the SEC FinHub has also been very busy. Innovators are exploring how they can harness new technologies to respond to post-COVID related and other challenges. We are currently hosting a series of meetings. I refer to them as virtual P2P meetups. Peer-to-peer meetups, meaning you have a face-to-face with your regulator. And these are thematically based. We heard a number of exciting innovations this summer around RegTech involving things like dynamic rules engines, predictive modeling, cloud-based data security and fraud detection, just to name a few. And this week, we're hosting P2Ps on artificial intelligence and machine learning. And through these types of meetings, we seek to engage with the public to better understand how financial firms are using innovative technologies to build new products, offer new services, create efficiencies, and enhance regulatory compliance. The world is increasingly digital. There are great demands, but also great opportunities in terms of keeping up with big data, regulatory changes, evolving markets, and even keeping up with countering new ways of committing misconduct, unfortunately. We're also very busy on the international front. There's been key collaborative work and ongoing engagement with regulatory and law enforcement partners, domestic and foreign, on a bilateral and multilateral basis to actively monitor and understand emerging issues, especially those around COVID. And there've been a number of developments, for example, in the digital asset space. Recently, we had a digital token offering in a registered offering for a digital asset to be declared effective by the staff. We've had two offerings go out under offering circulars under Regulation A, an exemption from registration. We've had a number of no action letters go out, two from the Division of Corporation Finance respecting digital asset offerings. We've had sort of a pilot program no action letter go out from Trading and Markets to a participant who proposed using DLT to record changes in ownership of certain equity securities in cash. We've had another no action letter from Trading and Markets go out to FINRA concerning how ATSs can now play a role in the settlement of digital asset securities. And in the investment management space, we've had now two digital asset related 1940 Act registered funds. So we've got a number of important developments that have happened just recently. And I'll just finish off by mentioning our most recently adopted amendment that expands access to capital. This is an amendment to the accredited investor definition, one of the principal tests for determining who is eligible to participate in private capital markets. And so the amendments update and improve the definition to more effectively identify investors that have the knowledge and expertise to participate in these types of markets. That's just a brief overview of some of the fintech developments that I can talk about. And there's much more detailed information about all of these developments on our website. So thank you for that opportunity.
No, of course. And that sounds very exciting for those investors who are able to demonstrate their subject matter expertise and bring that to the table. You know, we certainly can't talk about trends and initial observations without talking about the great work we're seeing from the Big Apple. Matt, do you want to tell us a little bit about what NYDFS is doing, especially given Governor Cuomo's recent announcement about the Empire State Digital, and then today's announcement about PayPal?
Yeah, absolutely. It's definitely been a busy time, and I agree with the sentiment that I think COVID has really breathed, additional urgency and prioritization into innovation. So I mentioned a few things, starting with kind of the announcement today. So, earlier this summer, we announced our intention to use our conditional licensing authority within the cryptocurrency space. And today we announced that PayPal is the first company to receive a conditional license from New York State to engage in virtual currency. It's good for 2 years, and the intention is that companies who receive that will graduate to a full license before the end of that 2-year period. And I think it's significant for a couple of reasons. I think PayPal is obviously, the original fintech, and so, or one of the original fintechs, and having them involved in this space really signals, the extent to which it's becoming mainstream. And then, secondly, it's significant for us because it's the first conditional license, but I think it's also significant in that they chose Paxos as their nationwide partner for this, which is Paxos is a New York trust company, and I think it's really a signal that the market does value regulated exchanges, and that that New York has a standard that is attractive. And then, otherwise, I think in the crypto space, so that's the conditional licensing framework, which I just mentioned. The other thing we did earlier this year is we finalized guidance related to coin listing. So we made it easier for companies that we supervise to self-certify new coins that they want to add. So previously, a company would have to come to us with every new coin they want to make available to their customers for proactive approval, and they can still do that. But we've also made it possible for them to self-certify that if they have come to us with a policy for doing that, which we would review and approve. So that's also been a significant development in the crypto space. Zooming out of the crypto space and looking at fintech more broadly, we have a lot going on there as well. We launched a program earlier this year called Fast Forward, which is focused on encouraging innovation that can solve some of the problems people are experiencing with COVID. And we've engaged with a lot of companies in that space. Seen a lot of interest from the insurtech space, which has been interesting. In addition to kind of fintech more generally. And then Siobhan, you mentioned Empire State Digital, and this is an effort that we launched with our colleagues in Empire State Development, which is our economic development authority here in New York. And it's really focused on helping small businesses survive, adapt, and grow during this time period. I think we all know that it's a very challenging time for small businesses. We also know that historically small businesses have been underserved financially, many of them. Many lack a business bank account, many lack access to capital. And so we launched this effort that's managed by our partners at Empire State Development with e-commerce companies to help New York small businesses adapt to the digital environment.
That's really interesting because it sounds as though you're not only addressing the needs of innovators who are looking to speak with you, but even small businesses who are looking to at least dip their toe in the fintech waters. So that's exciting. Beth, same question. What can you share about what OCC is seeing and what your innovation office has been doing? How has the pandemic affected business?
I think very similarly to what we've heard from Val and Matt, there's been obviously a lot of activity on the financial services front with the banking agencies as well. With respect to COVID, we have seen a significant increase, as you would expect, in digital activity. Digital activity now is a necessity as opposed to perhaps, oh, this is pretty cool, it's nice to have. Some people use it as their daily mechanism for banking, but others were not so sure about it. But when branches are closed as a result of the pandemic and folks just don't feel comfortable leaving their homes, they have really moved to digital apps and to digital banking in order for that to basically be successful with their daily life. So there's been a lot of increase in that. We've seen some projects that perhaps were put on hold for a period of time due to budgetary constraints or just other focuses by financial institutions now moving ahead to quickly develop more and more digital capability. We also saw that with the payroll protection program, the PPP program, where a number of institutions partnered with fintechs to develop very slick front ends to be able to process PPP loans as quickly as possible. And one of the things that the Office of Innovation did with respect to PPP is we facilitated 3 listening sessions to talk about particular challenges that technology and perhaps partnering between banks and fintechs could help reduce or facilitate. We did those, we put those together in 10 days. There were over 700 registrants and about 400 participants in those listening sessions. And what we heard from participants is that it really helped them with respect to the PPP program. In addition to that, as more and more institutions move to work at home, including in call centers, which I don't think folks really thought call centers could be work at home, there was a lot of AI that was used and chatbots to facilitate requests from customers and also to be more effective in the way that they the way banks serviced customers. Agencies were very busy with respect to the pandemic. I think we're often thought of, just generally, government is thought of slow, but I would point out that the federal banking agencies in 30 days put out roughly 33 to 34 pronouncements, guidance, interim rules, all on an interagency basis to address pandemic issues. So we can move quickly if we need to, should be the message there. OI's been very busy this year. We have an acting controller, Brian Brooks, who comes from a fintech background and has a keen interest in this area and has accelerated a lot of work that we've been doing. We issued an advance notice of proposed rulemaking this year where we asked a whole set of questions about various types of innovations and seeking questions about whether or not the OCC could provide more clarity, particularly in terms of the permissibility of such activities by federal banks and federal savings associations. We received close to 100 comments on that ANPR, and we're currently in the process of reviewing those comments and determining what our next steps are. But we heard from a variety of different stakeholders, including fintechs and banks and community organizations and trade associations. We heard comments around crypto activities, distributed ledger technology, payment technology and processes, RegTech applications, and artificial intelligence and machine learning. And as I said, we're in the process of reviewing those and determining our next steps. In addition to that, OI is also building out. Last year, we announced a proposed program that we called the pilot program, where if we had a bank that was interested in or was in process of developing a pilot and there was regulatory uncertainty in that area, they could reach out to the OCC and OI for assistance in providing more clarity around regulatory questions in a proposed pilot. We haven't finalized that yet, but we're actually very close to finalizing that. I hope to have it out even still this quarter. But we're expanding it into a broader evaluation process where we will be studying various types of problem statements around regulatory uncertainty in a variety of areas, including AI, ML, cryptocurrencies, and payment technologies. And then finally, we've also been busy in the crypto space as well. We issued 2 interpretive letters, one in July, one a couple of weeks ago. The first letter clarified that it is permissible for federal banks and federal savings associations to provide custody services for digital assets. And the second letter related to the permissibility of being able to provide, basically hold the reserves of the stablecoin in deposit accounts. We've been busy too.
Yeah, no, definitely. It absolutely sounds like not only have you been busy, but you've been allowing data and the information that comes from your market participants that is really the driver for a lot of the programs that you're implementing. So we're excited to see that information is coming directly from your users. Melissa, when you read about the progress about federal innovation offices and you hear about this groundbreaking progress, the strides that we're making, but you always have the critics who say it's not enough. And having served leadership roles and careers in both sectors, private and public, what can you tell us about what LabCFTC is doing and how is the lab addressing the needs of the innovators?
Sure, thanks, Siobhan. First, just want to echo Siobhan's note to say thank you to DC FinTech Week and Chris Brummer. I know CFTC has always been a supporter of DC FinTech Week, and so happy to join into this broadcast today. I think if you look back 5 to 6 years ago, none of us would actually be on this panel because you didn't have innovation agendas at many of the financial regulators. Now you look at across the board, and you have U.S. financial regulators that have innovation offices like ours, the LabCFTC, or those of my panelists here, including federal and state, or they have innovation agendas where they're building out an innovation office. I think that goes to show how innovation is getting to be core to government and how government is working to adjust. One thing I know, Beth even alluded to it, right? The government doesn't move fast. and I think by all of us creating these innovation offices, I think it's a step to, and a statement to all of you in the fintech world that, hey, listen, we're trying to do the best we can with the resources we have, and we're trying to bring innovation internally to help all of you. Now to LabCFTC itself, obviously we've been around for about 3 years. Our office has been really focused, just as my fellow colleagues here on this panel, has been focused on being that front door for innovators, being the way that innovators can start the conversation with the commission in order to highlight, the new products that they're working on, or perhaps it's an area that they're focusing on that they're not really sure, do they fit under our purview or that of our sister agencies, and what should they be looking at? I think all of us on this panel, as well as some of my other colleagues and other agencies, we do our best to coordinate with each other and to help when it comes to innovators' questions like that. LabCFTC itself, about a year ago, when I started at DC FinTech Week, actually, we were elevated to an office to try and make the point that innovation has to be pushed throughout the commission. And so, in doing that, we've been able to be successful of bringing innovation to all of the divisions as new regulations and proposals come forward. The last thing I would just say, and I know we're going to talk a little bit about what does it mean for innovators when they come meet with us later on, but the last thing I would just say is in terms of when innovators come meet with us, it's so important that that you as innovators and others recognize that we're learning from you just as much as you're learning from us. We need to hear from you as to the new technology, as to what you're seeing. You have firsthand knowledge in terms of your customer base, in terms of your investor base, and in the case of what we look for, and how people are looking at this new technology and the value it brings. So when you come talk to us, recognize that it's a two-way street, and we're always there to help.
Yeah. And Melissa, I think you raise a great point. In a lot of what you all have been sharing this morning is really talking about how the government is looking to collaborate and partner with the private sector in order to advance innovation. And so maybe it's a good time for us to talk about pivoting in 2021 and what that would look like. And I'd love for us in the last couple of minutes of being on this panel here, be able to talk and hear from each of you, what can fintechs do to really be successful in meeting with your offices and being able to speak with them? What are some best practices for these innovators to come and meet with you? Have you seen some great examples or any war stories that you can share with us about those individuals who are looking to engage with regulators and understand more about how to move forward? Val, should we start with you?
Sure. So maybe it'd be helpful to just walk you through our process. The FinHub has a web portal through which the public can reach in and request a meeting. This is the first step. There's also a way at the FinHub's web portal to import supporting materials through the web forum. We often start with an initial call out to the person or people. We usually get back to people within a couple weeks, depending on what's going on. We'll ask you if you have any presentation decks or any analysis you're willing to share. People can submit these materials and request confidential treatment. It's always good if we get a good baseline of what you want to talk about and what your project is, so that we can get the right people in the meeting and really make a very productive first call or video meeting. We have had hundreds of either in-person or video meetings since we got set up, and we find it most helpful to have not only legal counsel if you have one. You don't have to have legal counsel, it's not necessary, but we find it much more kind of enlightening to talk to the business and technical people as well. So we often request that those people be in the meeting, because it's important, and often more important, for us to understand how the particular proposal works, the nuts and bolts, the technology used, than it is to talk about the legal issues. That kind of comes after we understand the facts. When it comes to the legal issues, we can't give legal advice, but we can certainly let you know how we view things, how we read our rules and regulations, provide you some guidance about your project and where we might see it hitting up against the guide rail, or if we see that it's something where we feel you could loop in the CFTC or DFS or another agency, we may, make a referral or a handoff, of course, with your permission. But that's the kind of thing that I think facilitates the communication with the regulator. As Melissa mentioned, if they realize you're educating us, that's your opportunity to educate us about the technology in your project, and we can also educate you about the law and our regulatory framework. Besides just the one-on-one reach-outs, we also have participate in tech sprints, build-a-thon, hackathon, forums. We try to put out messaging if we think it can be helpful. Some exciting ideas we've heard really is when I think technologists come in and try to automate and hardwire regulatory compliance into what they're doing, really building in that governance and future-proofing from the beginning. And I think they can see it and should see it as an opportunity really to form a really solid business, and one that will have competitive advantages because it starts off as compliant. So, the SEC, I think we've been at the forefront encouraging beneficial technology and innovation, but none of these innovations mean a reduction in investor protection or the need to eliminate the protections of the federal securities laws, but we just really want to work with people to help them find a compliant path forward.
Yeah. And Matt, same question. How can innovators work with your office?
Yeah, I'm glad you asked Val first, because that was just tremendous advice, and I hope everyone listening was taking notes, and it's all true, I think, for us here in New York as well. We have a similar program. As I mentioned, it's called Fast Forward. You can go to dfs.ny.gov/next to see that, and you can request a meeting with us. I agree with Val's points that having business folks involved in those meetings is very important to help us understand the business model and the technology and the products. And then the point about building in compliance from the start, that's absolutely, I think, what I would encourage innovators to think about. And I think you'll find it's a competitive advantage as well as you move forward. The only other thing I would say is that I think that, I think if you want to get our, we'll obviously meet with you. I think if you want to really get our attention and get us excited, I think that, we want to see solutions that help real people. I think we know that, fintech is innovation is going to happen regardless of what we do as a regulator. And I think we know that. I think, in many ways, our role is to nudge innovators in the market into solving for gaps that exist, right? And COVID has certainly identified those, and I think small businesses are one gap I talked about earlier. I think household resilience and focusing on communities that have been particularly hard hit by COVID. I think that it's very important that fintech actually be a force for good, and I think that this is an opportunity, and so that's something I think we'll be looking for. And then the last thing I'd say is we're also organizing a tech sprint focused on digital regulatory reporting for cryptocurrency companies, and that's another way that companies can engage with us right now.
Good. Beth, same thing?
Yeah, I think it's great going third, because I can just say ditto. I think that Val and Matt provided our excellent points and should be focused on. I guess what I would add is just to echo that the folks that come in that I think really get the OCC interested and excited are the ones that are focused on solutions to real problems, whether those are challenges that banks are facing or they're challenges that customers are facing. We have a project here under the acting control called Project Reach, where we're really focused on looking at solutions for structural barriers around financial services. And so that is something that we're really interested in hearing about. But we're also interested in hearing about those compliance and risk management focuses and how they can make banks stronger so that they can deliver their products to customers more effectively. One thing I would caution about is please don't come in and expect a good housekeeping seal of approval or an endorsement. That's not what any of the offices of innovation are about. In fact, that makes it really hard to have a conversation because we're not allowed to do that. That's not what we're trying to do. What we're really trying to do is understand what your products and services are, how we might be able to help you navigate the regulatory framework, which can be very tricky in the United States, but also how we can learn and benefit from what innovators are offering.
Yeah. And Melissa, having served in LabCFTC, I think I can speak for both of us that we would probably echo the same of our colleagues here, that for any fintechs that are looking to meet with the government, the first step is compliance. And you definitely want to come with your best foot forward, being able to share as much about your product and having as much clarity about your swim lane. Would that be a fair synopsis, Melissa?
Yep, I was going to say it's great to go forth because I would simply say ditto to everything everyone said. So yeah, thanks.
Yeah. So let's take a few questions from the audience. They've already been sent to me. I want to make sure that I get a couple of these questions in. So the first one says, in September, the OCC and SEC released coordinated statements clarifying national banks and Federal Savings Association's authority to hold reserves. This is on behalf of companies who issue certain stablecoins. Is this a sign that regulators are beginning to work more closely together to address the regulatory uncertainty surrounding digital assets? Val or Beth, do you want to take a stab at that one?
I guess I can start. I would not say it's the start. I think that agencies work very closely together, and where we can collaborate and provide more clarity to an entire market, then we're going to be able to do that. One thing I would say with the offices of innovation, and not just at the federal level, but also at the state level, I think there's been a great opportunity for the agencies to collaborate more effectively. We meet on a regular basis as innovation officers, talk about these types of issues. I think Val mentioned the handoffs that we do for companies and things like that. So I think this is another sign of the way that agencies can effectively collaborate in this space.
Yeah, thanks, Beth. And I'll just add, I agree. We've been coordinating from the get-go on this as we continue to explore these emerging technologies. I think we find it most useful to compare notes with each other, make sure that we're working from a common understanding of facts on the ground. We want to understand how our frameworks apply, because often there's overlapping or concurrent jurisdiction over the same conduct or activity. We want to make sure there's no regulatory gaps or potential risks that we haven't addressed, and we want to consider appropriate approaches going forward. So I think whenever we have an opportunity to put out a joint statement or coordinate, we've tried to do that. We've done that with the OCC, with FinCEN, with the CFTC, and so we'll continue to try to collaborate with our partners in regulatory agencies. We don't want to add to confusion. We want to add to, clarification and guidance if appropriate.
Yeah, and while we're in that same vein of talking about collaboration, Melissa, can you touch a little bit on GFIN, maybe the lab's involvement with that, or the CFTC's involvement with that, and how we've been coordinating and collaborating more closely?
Yeah, sure. Just to echo what both Val and Beth have said, it's not that we're just starting to collaborate. I think that we've been collaborating for some time. GFIN is the Global Financial Innovation Network. It's over 50 regulators around the globe talking about financial innovation. All of us on this panel, including all the other financial regulators in the U.S. At the federal level, at least, are on it, including some states. That's another avenue that we use to coordinate and collaborate with other regulators on a global basis. FinTech, we've talked about this, right? There's no borders when it comes to FinTech. And so it's so important that we collaborate and coordinate with all of our colleagues around the globe. And so that GFIN, is just one of those opportunities to do so.
Yeah. And Matt, share a little bit about how your office has been able to collaborate with other government entities and be able to kind of work across boundaries to bring solutions forward.
Sure. Yeah. No, it is very important. We also joined GFIN, and that's an important place for conversation. And I think that it's not only is it important. I mean, there's really no other option, frankly. I mean, this space is evolving in such a way that really we have to work together collaboratively. I think DeFi is just one example of kind of I think a direction the market is taking, and so that's very important. I think the only thing I'd add, in addition to what others have said, is that at the state level, the CSBS has also been very active in this area and making it easier for fintechs, for example, to have a single or a consistent licensing experience across states, and also with regard to the supervision of those states. But I think you'll only see an increase in kind of the collaboration that happens, because it's really, like I said, I mean, there's really no other option. I mean, it really is sort of essential, I think, for consumers and the future of the market that we work together on these issues.
Yeah. And one of the things I think that it's important that we're looking at is the outlook and kind of learning from 2020. A question I could pose to all of you is, what is 2021 going to look like for your offices? And how has 2020 changed what that outlook is, or what those plans were? Matt, I'd hate to put you up. You were the last to speak, but hot potato.
Yeah, I mean, look, I think that COVID has had a tremendous impact, I think, obviously on everyone, and has, I think, caused us to think about what our priorities are in many different areas. I would just mention two things. I think one is, as I mentioned earlier, it's focusing on innovation that solves real problems in the market and helps real people. That will continue to be a theme. I think small businesses and household resilience. And then secondly, I think COVID really showed the weaknesses associated with traditional regulatory reporting. So we get data from our entities on an annual basis, on a quarterly basis, that there's typically a time lag associated with that data. That's not really very helpful, right, in a moment of crisis, if you're looking at data that is that stale. And so I think that's one area that for us, there'll absolutely be increased urgency in improving our capabilities and moving from a point-in-time examination model to more of a real-time supervision model. I think that's going to be very important for us and probably for other regulators as well.
Yeah. Melissa, I can see you nodding head as well.
Yeah. I mean, just to echo what Matt has said, because of the pandemic, not only have we had to think about how fintech and innovators, right, touch our market space to ensure the integrity of the market, but as regulators, we obviously have to be thinking about how we do things differently as well, how we supervise, how we enforce. And it's not with us physically being in a room anymore. And so I think what you'll see, not only from CFTC, but with others, a more focused approach with data, a more focused approach with how technology can help us do our job better when we're not physically in a room together. I think one other area I would touch on in terms of what's coming next is digital assets and DeFi. You heard DeFi a little bit on this panel. I know I was watching DC FinTech Week prior to here, and I know the last panel talked a little bit about it. These are areas that we know are coming and that are around the corner. And so I think as regulators, we all will be looking closely at what's next to see what we can be doing. I know at the CFTC, we have in our strategic plan developing an harmonized regulatory framework in coordination with my counterparts here on this panel, with the SEC for sure, and others, in terms of how we can bring more clarity to the marketplace. And I would anticipate in the DeFi space, as we begin as regulators to dig down deeper into DeFi and how it touches our spaces, I can imagine there's going to be some more questions there. So that's what I see is what's coming for 2021.
Awesome. Beth?
Yeah, I would echo what Matt and Melissa have said. I think just a couple of points to add to that. I think if you can say there's a positive thing that has come out of the pandemic, that it's the fact that we all had to think differently on a very, very sudden basis. We suddenly had to change the way that we do business. My team is entirely remote. We had to learn how to do that, how to communicate, and get things done. And I think we've all proven that we are able to do that. So I think it's opened our eyes more to the fact that technology can really help us enable us to do things differently. And I think that has, at least certainly at our agency, gotten us to think about things in a different way, which will move us further more quickly. So I think there's going to be a lot of emphasis on SupTech types of technologies and products that help us do our jobs better and more efficiently and effective. I would also agree that I think there's going to continue to be an expansion of lots of activity related to digital assets. But also, I think that there's been a trend that has really been highlighted by the pandemic and really accelerated by that. And that's this idea of unbundling and decentralization of financial products and services. And that's going to cause us all to think differently. It's going to result in all the agencies having to work much more closely, not that we didn't work closely before, but much more closely together, because the intersections between our different missions and our jurisdictions are now going to become very acute as more and more different types of companies come into the financial services spectrum.
Yeah, no, absolutely. We're going to see that collaboration kind of increase exponentially, I think, in the growing days, especially since we have the opportunity to collaborate virtually. Val, the last minute belongs to you. Can you share with us what the outlook will be for FTC?
Yeah, and that's a lot of pressure, and it's difficult to add to the wonderful insights that Matt, Beth, and Melissa have just shared, because I agree with them all. I look at it in terms of maybe three levels. We've got on the top the supervisory technology, and then in the middle the reg tech. But I think those two areas there's going to be increasing in focus on how do we deal with the distributed workforce? How do we deal with how the markets and external forces on the markets are changing things at such a rapid pace, and with the plethora of data that we have to analyze. But then the third level, and perhaps the most important one, as Matt mentioned, is really the person, the consumer, the employee, the investor. You know, we can't underestimate the kind of an impact that COVID has had on our colleagues and on our the people that these agencies are here to protect. And so I think, the technologies that really give not the consumer and the investor the better experience, the better interface, but also protect them against some of the nefarious conduct that's happening out there, including, advances in onboarding processes, in AML, CFT processes, and those kinds of things that are critically important to maintaining the integrity of our financial system and the safety of people's assets.
Great. No, absolutely. And this was fantastic. I hate to wrap us up. I know that if we had time, we could most certainly continue. But in closing, I'd like to thank my panelists, Val, Beth, Matt, and Melissa. Thank you all for your insights and conversation this morning. At this point, I'd invite you to continue the dialogue with our partners with DC FinTech Week by selecting the DC FinTech Week link in the Hoover app. And for those viewing from CFTC.gov or the CFTC YouTube channel, you can stay right where you are. Don't forget to mark your calendars for our November 17th session, The Future of Digital Finance. Registration opens this Friday. We look forward to seeing you there, and thank you for joining us. Have a great day, everyone.